Pattern recognition is the process of identifying reoccurring events. In the markets, patterns equal profits. Why? If we know what is likely to happen, then we can tailor a strategy to cash in on events ahead of time. Now, Bollinger Bands aid in pattern recognition. In this video, we will look at the powerful Bollinger W strategy.
Bollinger on Bollinger Bands, technician John Bollinger shows us how his technical tool may be applied to the markets. One of his favorites is by defining chart patterns. Now, the W is a classic double bottom formation. It consists of an initial low, a retracement, and a second low. Thus, it looks like the capital letter W. The W is a reversal signal. It tells us when the market is ready to change course and move higher. Now, it's not hard to find a W on a price chart. Some W's are successful, some W's are false signals. That's where Bollinger Bands come in. They help us filter the winners from the losers.
Bollinger Bands are a public domain indicator. They are free to use and available on most trading platforms. Now on TradingView, click Indicators, scroll down, and click on Bollinger Bands. For the time being, let's leave it on our default settings. Our length of 20, our basis MA type is a simple moving average, our source is a close, and our standard deviation is 2. Now in MT4, adding Bollinger Bands is just as simple. We're going to go up to Insert, cursor to Indicators, come down to Trend, and click on Bollinger Bands. You'll notice our settings once again are 20 for the period and 2 for the standard deviations. Now in this video, we're going to focus on intraday timeframes, including the 5-minute, the 15-minute, the 30-minute, and the 4-hour charts. However, this list isn't all-inclusive. Feel free to adapt the strategy to any time frame you like. Just do some back testing first. All right, let's get to the W's. Bollinger Bands are plotted as a chart overlay. This application makes it easy to combine Bollingers with the W and identify positive expectation trades. All right, let's qualify Bollinger's ideal W formation. Now, the first low of the W falls on or outside of the lower Bollinger Band. Then, price pulls back inside of the bands, forming the retracement. Now, often this retracement touches the middle band, but it doesn't have to. It can fall short of the middle band. It can move above it all the way to the upper band. It doesn't matter. Lastly, price falls and forms the second low. Now, the second low of the W resides inside the lower Bollinger Band. It can be lower than the first low as long as it remains inside of the lower Bollinger Band. Now, the exact appearance of W's in the live market will vary. There's many different W's on many different markets and time frames. What's important is the relationship of the first and second lows to the lower Bollinger Band. This formation signals pricing exhaustion and the market's ready to reverse. All right, now it's time to talk about how to buy the market. When we trade W's, we want to buy strength. To do this, we wait for a larger bullish candle following the second low. Now, this upward thrust confirms the trend change from bearish to bullish. Now, upon the large green candle closing, we buy the market. Now, our stop loss is placed a few pips beneath the second low of the W, and we have options on our profit target placement and trade management. We may use fixed risk versus reward ratios or a trailing stop. All right, let's take a look at how to trade the Bollinger W in the live market. All right, let's trade the Bollinger W. The first thing we want to do is we want to see that initial first low beneath the lower Bollinger Band. Then we want to see our second low set up, and then we're looking to enter on the large bullish candle close. This is going to be a trade that we execute using a fixed risk versus reward profit target. Now, you can see that I've sort of already got this one spotted for you, but we're looking to get beneath that lower Bollinger Band, and that is when we're even begin looking for a W. Okay, right now we're looking for a W. Do we get one to set up here? Well, let's go ahead and let the tape roll, and you'll see, no, we don't get it. Why? The second low is beneath the lower Bollinger Band. That's critical. This does not qualify as an ideal Bollinger W. Now let's go ahead and let this roll forward, but this one does. And you can see right here, we have a nice second low that's inside the lower Bollinger Band. There's our first low, retracement, nice significant retracement. Second low, that's critical. That's inside of the lower band. And then where's our entry? Well, there's our large bullish candle. We're looking to enter right here, a buy on the close. So when we're developing this trade with a fixed risk versus reward, we know that we want to put our stop loss a few pips beneath the second low. We just figure out our risk from our close on that big, large green candle and our stop loss, and then we just assign a risk versus reward accordingly. In TradingView, this is a fantastic tool. You just go ahead and you click on sort of the trade builder, I would call it. The first thing we want to do is dial in where we want our stop loss, and that's going to be right there, right down beneath where our second low is. And if you just hit settings on there, you'll see we're going to use a $10,000 account. We've got a lot size of 1, a risk of 3. Our entry price is right there on that bar close, 108.37. We've risked 422 ticks. So this is where it gets fun. How much do I want to look to gain here? Remember, this is a reversal strategy. I highly recommend going for at least a 2-to-1 on these Bollinger W's, just because we're looking to get the bottom of the market and get in on that sweet bullish price action. Let's go ahead and roll forward in time. Now, you'll notice you're in this trade for quite a while. This is a 4-hour Euro USD chart. And then what happens? Well, there you go. You finally get the break. You can see you traded in profit for a majority of the trade. And then you finally got the big break, closed out the trade at a $612 profit on our $10,000 account. Not too shabby for a trade on a 4-hour chart. All right, let's talk a bit about how to use a trailing stop when trading the Bollinger W. Now, there is some variance and some nuance. Each trader does this a little bit different. What we need to know and what's important is that your initial stop loss is still going to remain beneath that second low of the W. Now, as we move forward in time, the trader has really infinite options on where you want to put your stop loss. Some traders, let's just stop it right there. Some traders move their stop loss symmetrically, meaning they want to pad it a few pips beneath each price bar with the idea that they can get in on a big runner and potentially unlimited profits. Other traders just sort of move their stop loss to maybe a percentage of their initial risk just to cut their liability and swing the risk versus reward in their favor. It can be a delicate process when you're using trailing stops. One of the most popular trailing stops is to wait for these trades to go, say, at a 1-to-1 ratio and then move right up there to break even so you have a risk-free trade. That's a very popular way to do it as well. Just remember, when you're using trailing stops, the risks are getting stopped out before you get your big move. But the benefit is, if in fact you do the trailing stop correctly, you're limiting your liability while potentially putting yourself in a position for unlimited rewards. And you can see that if you do it right and you don't trail too tight, you can get on big time moves, especially using a reversal indicator like the Bollinger W. So it's up to you. Which would you like? The initial fixed risk versus reward or a trailing stop mentality? Either way is just fine. Just be sure that that first stop loss is located beneath the second low by a few pips.
In The Road Not Taken, Robert Frost sums up his path in life. 2 roads diverged in a wood, and I took the one less traveled by. That has made all the difference. In Bollinger on Bollinger Bands, John Bollinger has similar views on the markets. Quote, "In trading, there is no holy grail other than the one you fashion for yourself." Now listen up. Even if you master the Bollinger W strategy, your success will depend entirely on you. You'll win if you have patience, discipline, and desire. If you don't, you will lose. Learn how to trade the W. Trade it with discipline. Take the road less traveled. Choose to win in the markets.